Hey everyone, hopefully you're having a good day. I've got Scott with me. My name's Andy, Finding Value Finance. This is Sow and Reap Capital. If you want to subscribe to his channel, or if you like what we're talking about, go over and subscribe to his channel, Sow and Reap Capital. We're going to talk about uranium, and we had Rick Rule talk about us being in the sixth inning of this ball game. I know some people, they said that we shouldn't be talking about baseball and uranium together and the inning thing, but he said we're in the sixth inning, and there's 9 innings in a baseball game. So he's saying that we're kind of towards the back half of the uranium bull market. And I guess Scott and I were talking about it a little bit about the sixth inning and what our opinions are on it. We're here to share our opinions on where we're at in this uranium bull market. So Scott, where do you think we are in this uranium bull market, and why do you think it?
Yeah, I mean, in terms of, I guess, the time frame, I would agree that we're towards the end of the bull market, in that because the biggest runs come towards the end of the bull market. I think in terms of the time frame that's left, so we've been in this bull market since 2020, right? So beginning of 2020, so it's been 2 years so far. I mean, I think the biggest gains will come in the next 18 months, as I've been saying. So in terms of, I guess, the time that's left, I think we're around that mark, around halfway mark. But in terms of the gains to be had, in terms of percentage terms, I think, yeah, we're probably in the second, third inning right now. So I guess it just really depends on what kind of measure you want to put in place, right? Is it the time frame that we're talking about, or is it the percentage gains that we're talking about? So just differs.
So when you say that we're in, the second or third inning for gains, and maybe the sixth inning for time frame, what is driving the uranium bull market for you to have that type of viewpoint? What are you considering to be the drivers, and why that time frame, if that makes sense?
Yeah, sure. So I think one is really how small the sector is. So, given the size of the sector, I expect a huge rush of money to flow in and it to absolutely go parabolic, just like all the past bull runs in the past. So basically what happens is, despite the supply and demand fundamentals or whatever in uranium, I know we've got a huge deficit. I know a blow off top won't necessarily solve the supply deficit issue. But having said that, if you're just looking at the price movements of this commodity and the relevant stocks, that blow off top will be met with selling by the institutional and smart money. And then selling begets more selling by the retails, and which is why I think once there's good enough profit in the market, there will be sellers in the market, regardless of what the fundamentals are. So that's kind of what I'm looking at. Given the size of the market, and given that I am expecting a huge rush into the market, and I'm expecting a huge parabolic move in this market, yeah, that's what I'm expecting. So this is a CCJ chart, and for those of you that haven't come across my comparison between the 2000 run and the run today, and this is not necessarily an indication of the size of the move, because I think the size of the move can be greater this time around, given the much better fundamentals. But if you look at this, so this is a very long rounding bottom, so that we see. And this is obviously on log charts, so you don't really see it too much. But as I've been talking about here, you've got approximately the same length or duration, and also the depth. So you can see that these are pretty equal looking rectangles, basically. If I turn the log off, what you'll see is a very good rounding bottom. So this is rounding bottom, this is rounding bottom, and we are just breaking out of this. And obviously we're coming down to retest this level as the market's selling off. And we've talked about this, how we think, there might be a little wick below and then it might come up. But regardless, we've had a breakout, and I think we're close to retesting this, and perhaps over the next few weeks or months, we're going to finish retesting. I think we'll be ready to move higher. And once we do finally get above this level, so this linear chart, and this is just looking at it from a technical perspective, you've got this trend line going across like that. So what I'm doing here is just drawing it across the body of the candles. So ignoring the wicks, and you've got a perfect retest of this level here. So once we break out, and this is the behavior that we typically see across many different charts, and I've made a comparison recently to wheat. So if we just go to the wheat chart, what we've got is something really similar to that. So we've got a pretty linear and pretty good looking parallel channel going up, uptrend. And then we finally break out, and then we start going parabolic. And that's kind of what I'm expecting from uranium. So once you have this, my rule of thumb when it comes to trading based on monthly chart, and monthly chart is probably the most important thing that I look at, is how long it takes. So what you typically see with these breakouts is 5 to 8 months, very strong up candles without too much of a rest, and then maybe 1 or 2 months of pullback, and then a huge run up again, which is exactly what we've seen in CCJ back in 2000s. So what you see here is once it broke this level, so to make that comparison, basically we broke out this level, I think, but what's different this time around, given the market conditions in the general equities markets, we're coming down to retest, and we're probably ready to launch higher after that. So what I'm expecting to see is good 5 to 8 months of run up like that, maybe come back down for 2 to 3 months, and then launch higher again. And so this is a typical pattern that you see everywhere. And it's also in the Livermore's bullish cylinder, like your typical Livermore bullish cylinder, which has this. So we're in this accumulation pattern right now. And what Livermore cylinder says is you've got 8, which is the first leg up, the first parabolic leg up that I'm talking about, 5 to 8 months in length. And then you get a pullback, and then the biggest run after that comes at 9. And then you can actually go up for a little bit more, but I'm not interested in 9 to 10 on this graph. So in terms of catching the biggest move in this bull market, I think we've got 18 months left. So that's what I'm seeing.
Yeah, so you're basing it off of chart patterns of previous
Yes.
chart patterns in history of what you're doing, and the driver of this is money rotation from like bonds and stocks, or what? Like you're talking about, you said money rotation. You think it's going to rotate into uranium? So that last bull market was spanned across from 2000 was like the bottom, kind of the bottom of the bottom. And we had some jiggles in the beginning, you know, like up and down movements and stuff. We had that break in 2004, I think, was when it really started to moving, was 405. So would you say that the current market conditions today are like 2004, 2005? Or do you think we're more like 2000? So it's just because that's where I get confused. Yeah, this is where I get stuck.
Okay, so I think it's more like 2004 right now. So the reason for that is the trigger, and the trigger that I've been talking about quite a bit is just the Fed funds rate, right? So, you know, money wants to flow into undervalued sector, but it doesn't really happen until there's a trigger. And the rise in interest rate, for example, the Fed funds rate can be that trigger, because the valuation, you know, of general equities using your traditional valuation metrics, net present value calculations or discounted cash flow calculations, can impact the valuation of your general equities that are cash flow based, right? So what you see here is here. So this, I'll draw this back in. So this rectangle, this rounding bottom, the duration and length, the depth we talked about is pretty much similar. And then you've got the rotation of money from the trigger of rising rates, coinciding with the end of this rounding bottom in both cases. So for me, because there's a trigger plus the pattern as well, the technical pattern, the rounding bottom, and how deep and how similar they are in length, I believe we are comparable to the 2004. So that's what I see.
Yeah. So when I think of like the the commodity to stock ratio, we are really, really, really low. And I could almost argue that we're in the 2000-ish timeframe. And what I mean by that, if you look at the 2000s, you have that Fed funds rate. They also were increasing rates at that time, kind of at the beginning of that bull market.
Oh, here.
Yeah, like over there in the 99 2000 timeframe. And that there pricked the bubble in the technology stocks in 99 2000. And that created that downturn. And where are we today in terms of the Fed funds rate and the rollover of technology? I would say it's very similar to like 99 2000 2001 timeframe, like that rounding top with the increasing interest rates. Then I think that they're probably going to reverse course and lower rates when that thing starts to crash in the technology stocks and bond market. So I think they will have a crash over there. And I think that we're going to get, I'm just posing questions here. What if top of 2006 and 7, that 2007 top in CCJ, what if that's the entire rounding bottom of the entire thing? Like, what if that's one big rounding bottom and then we have a massive blow? That whole thing is one big rounding bottom. And we have a huge blow to the top of a much larger thing. And I'm not right here. I'm just kind of, the reason I'm asking this, and I don't know the answer, I'm just trying to ask. It seems like with the technology stocks in the bond market rolling over, and remember, the bond market is like, this isn't like the mid 2000s. The mid 2000s wasn't a gigantic bond rotation. Today, we've got, if this is the bottom of the bond market, there could be way more money transferring over, like that just dwarfs what it was before. So I'm just, I don't know the necessary timing. What I'm saying is, it seems like the best, like we're in the year 2000 or 2001 or something, and the stock market's ready to roll over, and the big amount of money is about to just start rotating over. So I think we're right in terms of the rotation of money. I am a little bit, I don't know for 100% fact that this is like 2004, because 04, that's when the housing market was really heated up and was basically starting to add inventories shortly thereafter in like 05, 06. Inventory really started kicking on. I almost feel like this is 99, 2000, or the beginning, more towards the beginning, because the housing market hasn't had an expansion phase. We've got a rollover in the technology stocks just starting, which was analogous to 01. We've got the bond market that's like selling off big time. So there's been, I think, $8 trillion of rotation of money out of the bond market. And then this could just be the starting point of it. We're just starting to break here. And let me share my screen. I'll show you what I mean, because I'm going over a lot of stuff here.
No, that's good. That's good.
So what I mean is, like, here's the commodity to equity ratio. I mean, we're just barely starting up. And in 04, I mean, we were up here in 04. 04, we were like, around 6. And we had a little pullback, and then the top. We're down here below the 99 tech starting. So our ratio at least is below everything. And then we've got all these charts where if we were to look, I mean, we are below in silver. Silver hasn't even broken out yet.
I know.
And we've got all these other, like composite index for the TSX just barely breaking out. And this is the rollover of the S&P 500, and the NASDAQ's doing the same thing. It's just starting to roll over. We've got bonds that are starting to roll over just recently, which will be fuel for this fire. We've got, obviously, Kathy Wood is putting on a stellar display of how to put a bubble top in. And I'm just starting to look at all this, and I'm going, well, we might be really early, and we've got the 10-year real yields just ready to eat it. And 04, we were coming back up with real yields. So 04, we had real yields coming up in a downtrend. Now we are like, I don't know what the heck this looks like. Then we've got the housing market, and I'm just trying to put together evidence. I'm not trying to disagree or whatever.
No, that's good.
In 04, you can notice that 04 was the year that basically we started moving up with inventory. Like, it was just starting, 06 really. 06 was the year that inventory started to go up. And today we're at record low inventories that we've never seen before in history. We were way down there. So I'm trying to put this all together. I mean, our driver of inflation is the housing starts, and the housing starts really haven't heated up yet. So,
Yeah.
but you've got, I mean, obviously you've got your timing that you've done comparisons in history. What does any of this data change your mind, or do you think it's still like we are '04 no matter what because of the way the
No. So here's the thing. So I'm looking at uranium market quite separate to all the commodities, because I think within the commodities, the bigger commodity market, everything runs at different times. So if you look at back in the 2000s, for example, you had like oil run first, and then uranium did a massive catch up and then had a blow off top way before oil had a blow off top in 2008. So uranium basically had a blow off top in 2007, started run it's a little bit later than oil is from memory, and then had a massive blow off top, caught up with oil, had a blow off top, and then oil did a blow off top, and then iron ore did a blow off top. So everything happens at a different time. So what I'm expecting to kind of see is based on history. I'll just share with you my screen again. So in terms of uranium itself, I completely believe what you're saying is right in terms of we're just starting this commodities bull run and we've got a long way to go. But if you look at this, so this is just a history as you know, how quickly will it happen, kind of put together in the presentation that I did with you when I first caught up with you. But basically it's like as short as, so basically what I've done here is I've done a measure of when the bull market started. So when did we see the trend change to when did it peak, right? So based on history, so in 1970s, it started in 1972 and peaked at 1976, right? So 4 years. In 2000s, it started in 2000 and it peaked at 2007. So 7 years. So history guides me that this bull run normally lasts 4 to 7 years, right? In total length. So if you look at this now, as to when uranium bottomed, we actually started in 2016, right? 2017 or thereabouts. So if history is guides, what this is telling me is between 2017, 4 years from 2017 is from 2021, the range is 2021 to 2023. So obviously it's already past 2021, but what I'm expecting is that duration of this will be between 4 to 7 years in length. And I think it speaks to the size of the market. So with other commodities markets, a lot bigger, they are slower moving beasts. And it usually takes a lot longer for the bull to build up momentum and for it to finally go on the blow off top. But given how small this market is, the uranium market is, I think the move will be rapid. And when the money starts flowing in, I think it's just going to be a parabolic move, and then we have a blow off top, and then the institutional investors will want to all get out at the same time. And you know what happens, right? In this environment with the retail investors, like people are panicking right now about a 20% decline. So can you imagine right at the end of the bull market when it's dropping by like 40% and it's gone parabolic for the last couple of months, you know how much they will panic, right? So I believe it's not the fundamentals necessarily. It's not the fundamentals for the commodities market in general. It's not the fundamentals for uranium even, right? Because I think there will be a supply deficit for a long period of time. So it's not the fundamentals that are driving the price movements. I think it will just be purely market behavior that will drive this market, just like it drove Ethereum prices. People will just be chasing momentum on its way up and then dumping it as it starts falling. So yeah, hopefully I answered your question. But what I do think could happen, and this is something that I'll need to keep an eye on. So back in 2000s, for example, here we started going up again, like the rest of the commodities. So if you look at a lot of the commodities back in 2000, back in the 2000s, a lot of them actually did put in a little bit. Obviously, everything went down, sold off together with the general equities. But then a lot of them came back between 2009 and 2011. Silver is one example. But if you look at copper chart as well, that's one. Rare earth did a massive move from 2009 to 2011. So you've had various commodities after a deflationary pressure that we've been talking about. So you and I both think, there might be a deflationary pressure, maybe, I don't know, 2 to 4 years down the road. I mean, it's hard to predict right now, but that's kind of the ballpark that we're thinking right now. So after that deflationary pressure, what I think could happen with uranium is if the supply and deficit, supply demand fundamentals are still there and still very strong fundamental case, and the stocks are very much depressed, then I think we could see another huge run up after the deflationary pressure. So I think, I'll probably reassess whether I should be entering back into the trade then, but I do expect it to be a massive and very quick blow off top over the next couple of years.
Okay. And I know that you have 2016 being your bottom as your starting point. That's what you had for that yellow line that you drew in there.
Yes.
Do you think that's the correct starting point to start the clock?
There's no exact time. But it roughly aligns with the, let me go back to the CCJ chart. So it does roughly align. So obviously we had the fake out in 2020, but if you just go middle of the rectangles here, so we've said 2000 is where we started. If we kind of go into the middle of this, it's like 2017 or 2018. So yeah, it roughly matches up. And what you would see typically within these charts is also that the big miners start running first. So big miners, as the institutional money positioning themselves, they start moving fast.
So I guess what I'm kind of asking is, now what if 2020 was the bottom there and the overall rectangle is larger than the rectangle that you've driven or drawn? So draw the beginning of the rectangle at the peak of 2007. So draw
here
like that, and then draw to the right another equal length to the right there. If you could drag it to the right. Yep. So drag that to the right.
It's
now that is now let's say that's like a larger fractal of a bigger market. I'm just going crazy here. And let's say the bottom was roughly in the 2020 timeframe. And then if you look at how the previous market went up in its movement from the bottom, how it went up, pulled back, and then it went up to the corner. What could we have that same type of movement just on a larger scale? And that scale, when we break that, goes just to ludicrous land. So what I'm saying is, I'm not saying that you're necessarily wrong by any means or anything like that.
Yeah.
Right. I'm just saying, what if it's a larger fractal of that smaller fractal, and the time frame's dragged a little bit longer, and that this larger position aligns better with where we are in the money flows of the 2000s, like 2000 is today roughly, or 2001, somewhere in that range. And then the bigger movement is still yet to come, and we're really early. So if that is the case, we still could have a pretty large pullback, like the 2002 July pullback that you have there. We could have like a pullback
like this
here with the overall markets. When the markets kind of come back down, we get a pullback, and then we slingshot like a I don't know, like some sort of animal, like a cheetah. We cheetah slingshot just massively higher. And the difficult, the way that you could put the double bottom, that's an inverted, I think that's an inverted head and shoulders, basically, almost. If you draw a line across the neckline down below.
Right. It is.
Almost, the neckline is somewhere in that range there, like an inverted head and shoulders. Now, if you look at the pattern that we have on the right, there could be an inverted head and shoulders that's developing somewhere in there too, where we have the left shoulder, it's that pullback, the head, and then the neckline is up top almost. Yes.
Like that.
Something on the lines of that, but a larger fractal. And I'm not saying that, the reason I say it could pull back in the short term is because the overall market's going to pull it back a little bit.
Yeah, I think so.
And I don't know if this is 100% the case, because you could be 100% right with what you've said. And that's the reason I don't trade in and out. It's like, buy this stuff. If it comes on back, I'm going to buy more.
That's right.
Because I don't want to be left out. But I'm just saying, if it's a larger fractal and you look at the two, what if this is like the major, like a huge, inverted head and shoulders that just blows up to like ridiculous levels because of the size of money coming from the bond market, stock market. And we're just starting to see that rotation. Like, we're just starting. Is that a possibility, or like, or am I
I
off?
think anything's possible, right? So with the markets, it's really hard to predict until you kind of see it play out. So, for me, if your case was to come true, for me, what I would like to see then is just a grind up like this. So if it's just grinding up, so
Yep.
yeah. So say for example, right now we've just been putting in like 2 green candles, 1 red candle, 2 green candles, 1 red candle, 1 green candle, 2. So it's kind of just alternating between the green candle and the red candle. So for me, the clearest sign would be then to see this type of pattern continue on, right? So is it just putting in like a couple of green candles followed by a couple of red candles? Then for me, your scenario will become definitely more likely. But for my scenario to play out, I need to see like 5 to 8 very strong green candles in a row.
Yes.
And then a massive pullback, like really hard pullback, and then another 5 to 8 months of very, very strong green candles. So that's my scenario. But if we, over the next 6 months or 6 to 12 months, just go back and forth between green candles and red candles, then your scenario will become much more likely. Yes.
Yeah. So I guess what I'm saying is there could still be a bear trap that comes on down and traps everyone in the short term. That's kind of what I'm thinking is going to happen. You're saying we already are past the bear trap in that normal whatever. So if you were to look back in 2002, there was a bear trap that when it fell in 02, that sell off in 02 there, that's the bear trap. What I'm saying is the bear trap hasn't happened yet, that we're before the bear trap. So Rick Rule would be saying we're in inning 6. What I'm saying is we're in inning like 1 or 2, or like inning 2 maybe, where the institutional investors just started investing in it, and they haven't really gotten a huge stake yet. The bear trap in 02 is yet to come, maybe. I mean, I don't know. We might have had it, we might not have. I don't see a clear bear trap yet. You could maybe say that it happened already. These things are really hard to see in real time. But the bear trap could be in 2020 could be the bear trap that someone could argue, and then we went up from there. Or the bear trap is still yet to come, and 2020 was a fluke of a medical event that wasn't supposed to happen. So I'm going back and forth because I don't know the answer there. I'm just trying to figure out, like, do we have another pullback left of a much larger fractal with a whole bunch of money ready to pile in at some point? And because if you listen to,
and what does that mean? I mean, if what you're saying plays out, and we have a bear trap pretty soon, then what I would expect to see is probably a pullback to this level. So what you've seen here, this is a pretty strong level, right? So you've had a bounce here, you've got whole lots of resistance here. So if what you're saying is right, then I would expect to see a pullback to this level here.
What about the level at like 1750 or like so, somewhere in that? Yeah, that level there.
That's a possibility as well. Yep, that's a possibility.
What about that level, like a pullback to there?
Yeah, that's possible.
But yours could also be right because that's the shoulder. So somewhere in that range is what I think.
So you can have like a little head and shoulder here then. So you can have like this. Let me just.
And I'm not saying this is what's going to happen. What I'm saying is it's a possibility.
It's a possibility.
Not a likelihood.
Yeah, it's a possibility.
And that's if the whole market sells off here recently. Yeah, it could drag us lower with it. And is that something we would want to see? Would we want to see that drag lower, or do you want to see this thing just blow right now? You just want to see it say, "Hey, look, see ya, we're gone."
So for me, what I would like to see is just a retest of this breakout level. So for me, this was a breakout. And there are a couple of other charts that make me think that we are breaking out, right? So U.UN is one of them. So we've had a pretty clean breakout. And for me, this just looks like a retest. So we've had a whole bunch of level here. So we've got support here, resistance, support, and then broke down and then came up. And I know these are wicks, but you've had multiple tests of these levels, right? And then you've had a breakout, and then now it looks like you've tested this level again, and it looks bullish to me, this chart, right? And if you go back to a lot of other charts as well, so like Bannerman, for example, I'm just pulling this up because not financial advice or anything, but I'm just pulling this up because this has a really clean chart. So this is a very strong level for Bannerman, right? So this is a very long-term resistance and support. Once again, you've got resistance here, support, 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 broke down, came back up, it was acted as resistance, you broke out, came back down, retesting this level, and it looks like it's ready to go. So for me, if this pattern was to break, that could result in a very long consolidation. Like just looking at this technically, right? And it's same with a lot of the other uranium charts as well. So mega uranium, for example.
Yeah, they're all sitting on top of resistance lines. I totally agree with that. They're all sitting on very good spots.
So yeah, same with this. So if we had consolidation, if we came down, if CCJ was to come down to those levels, I'm sure these miners will get smashed, right? If they get smashed and they came back down below this line, below this support line, I would see then just technically, purely technically, like that would potentially could result in very long consolidation. So I don't know. I still favor just a quick retest and back up in a couple of weeks or a couple of months. And as I said in the last video, I do expect this pullback to be shorter than the last pullback, just because I know we're maturing in the bull market. And typically what happens is your consolidation periods become shorter and shorter as the bull matures. So that is still what I'm expecting. That's my base case, but I could be completely wrong. It's all based on probabilities with technical analysis, right? So, there's not going to be I don't have a crystal ball. No one does. And I'm just, doing all the analysis based on probabilities. So that's what I see.
If the last bull market was persisting because of money rotation, could this bull market last longer than the last one? Could we break out now and go all the way till like 2026 or 7 or something? Is that a possibility, or is that just crazy talk because of the money rotation coming from the real estate market? Or do you think this is just going to be hot and heavy, super short, and we do exactly like the last because I mean, we do have 2 times, 70s and this last bull market only lasted, but could we go 7 years from here or 5 years from here? Is that a possibility, do you think?
I mean, it's a possibility, but I don't see it play out that way. Just because given how small this sector of commodities is, right? So with uranium, we've got a market capitalization of like less than 50 billion right now, all uranium companies combined. So when the money flows in, it will create dramatic moves, right? It's not going to be like your gold and silver equities where it moves up slow. It's going to be like quick 10x, quick 50x, whatever it might be. And like when you see those type of gains, like it's very hard for me to think of a situation where like people won't start taking profits and cause a bit of panic in the market. I mean, what surprises me right now is how panicky some people are on like social media. Like, I mean, how much do we actually fall? Let's do it. Okay, so CCJ last month fell 11.31%, right?
Yeah, well, it's
so I mean, if people are panicking about 11.31% drop, then like, what are they going to do when we see 16% or what was this 25% drops? Everyone's going to be panicking and everyone's going to be dumping their stocks. So yeah, I mean, it's just the nature of the markets, right? So I mean, to demonstrate that point to you, I'll just use Bitcoin, right? So with Bitcoin, that the run is okay. So let's just start from the bottom to the top, right? So I'll just demonstrate date range. Let's say we've bottomed here to the peak, like to that peak day. It took 790 days, right? But if you look at something like Dodge, which has much smaller market capitalization, like there's hardly anything in it, right? So you've had a breakout. So you've had bottom. I can't even see the bottom, but let's put it on log.
Like 4 months, just killed it.
Yeah, I mean, these runs don't take long because the market capitalization is so small, right? And even if you go smaller than this, I think Shiba's smaller. Shiba Inu. Like that's it. So that's the effect of market capitalization. So what I mean when I say uranium's going to have a pretty short bull run is it's not because of the fundamental. I think it's purely based on the size of the market and how much price movement is going to we're going to see based on the money flows into the sector. And that's why we see very quick gains very quickly. And yeah, I think we'll be done. And you know, maybe, you know, 2, 3, 4 years down the road after the deflationary pressure, it might be worth revisiting uranium. I think it will definitely be on my radar. But I think if I do see solid green candles for 2 leg ups, 5 to 8 months in length, I get out. And I think I'll be able to find a lot more attractive commodities to be in after that.
So I'm gonna go back because I've got an okay memory still.
Yep.
I remember that oil and uranium would peak kind of roughly at the same price. Do you think uranium is going to go up at a faster rate than oil? And do you think they're still going to peak at the same price?
Yeah, that's my base case. That's my base case. But I think one thing that's kind of important to remember for uranium is most of the uranium stocks, I mean, although uranium peaked 140 something bucks, most uranium stocks peaked at around $75 uranium price, spot price. So for me, the stocks are going to peak a lot sooner than the spot price of uranium.
Okay.
So that's another base case for me as well. So although I do believe uranium prices can go ridiculously high, like $500 per pound or $1,000 per pound, I don't think the stocks will peak when the uranium price peaks. I think the stocks can peak a lot earlier than that, especially your major miners and also your mid caps. So that's what I'm expecting. So
would it be good, or would it be a strategy to buy a uranium junior company, ride it all the way up, sell it, and buy the Sprott Physical Uranium Trust? Would that work?
You could do that. You could do that, but realistically, you don't have much of a gain, right? So basically, I'm looking for at least 10x in my uranium stocks, right? Until the uranium bull ends, and then I want to be rotating into another commodity that will give me another 5 to 10x, right? So if you do trade the uranium physical uranium, then you're probably only looking at 2x. I know I'm being greedy. I should probably be happy with the 2x, but I will probably look for other opportunities out there that haven't run. So I'm sure I'll be able to find, like just like in 2000s, every commodity runs at a different time frame. So I almost see rotation of money from one commodity to another commodity. So once uranium bull's done, I'm sure people will be looking for the next thing within the commodity space, like I am. I know lots of people might be looking at that. So I feel like there's rotation of money within the space as well. So I will have to find something that looks really good technically, like chart-wise, and I'll have to find the next one. So right now I'm looking at like potentially iron ore. Iron ore is going to be, I think, a great play. I know I shared with you a few tweets around China picking up their infrastructure project and so on. So obviously that's bullish for iron ore. Another thing that's kind of on my radar, I know I've started entering into shipping, but obviously we haven't seen the momentum pick up in shipping yet because we're in very early stages. So if that hasn't run, by the time I get out of uranium, I might get more, right? So like copper, like it hasn't really run yet. So
the shipping index is highly tied to iron ore as well. If you want to know.
That's right.
Very highly tied.
That's right.
Yep.
Yeah. I think like almost like or 40% or something like that of dry bulk shipping is iron ore. So that makes a lot of sense. So yeah, shipping, iron ore, copper. Also be looking at like agriculture stuff as well if they haven't run. Like sugar. I've been eyeing. So I mean, I feel like there will be lots of opportunities. So what I'm planning to do is catch the bulk of the move, which I think we'll see in two big leg ups. As I said, 5 to 8 months in duration. I'll catch the big move. I won't wait for the consolidation because I think a lot of the stocks can still do like 2 to 3x from there. But what I'm looking to do is pull that money out and rotate into something that's going to give me another 5 to 10x. So before the deflationary pressure. I think we might be able to, if we're lucky, and this is what I'm hoping. I mean, obviously it will depend on, fingers crossed. I'm hoping to see, I'm hoping to have like 2 big things that I ride through this commodity cycle before the deflationary pressure. And obviously, you know what my final play is going to be. It's mainly going to be precious metals after the deflationary pressure. But I'm hoping that I can ride two big commodities before the deflationary pressure down the road.
Okay. Well, that's all I've got. That's a lot to digest there. Thanks for coming on, Scott. I really appreciate it. Sow and Reap Capital is his YouTube channel if you want to check it out. They've got a couple of clips up there, or video clips that you can watch. And if you haven't checked out my Finding Value website, Platinum membership below, if you want to sign up to that, we look at all of the stuff that we talk about here about money rotation. We talk about the sectors that we like currently. Some of them are different than what we've talked about today. But yeah, thanks for making it all the way to the end, guys. We'll catch you next time. And Scott, I don't know if you have any ending statements or anything like that. If you want to make any, it's up to you if you want to or you don't.
Yeah, no, I'll do a quick one. Thank you.
Yep.
So here, I'll just go back to the Old Testament. Yeah, so this is Psalm 28:7. The Lord is my strength and my shield. My heart trusts in him and he helps me. My heart leaps for joy and with my song I praise him. So yeah, just wanted to share that. Thank you.
All right, guys. This is Scott and Andy, and we'll catch you next time. See ya.
See you later. Bye.